All right, so from the top of the exercise set for chapter 6, company has estimated overhead of $250,000, 100,000 direct labor hours. The cost of that direct labor is $2.5 million. And then machine hours are estimated at 12,500. So we're going to calculate the overhead rate 3 different times using these 3 different drivers. What's it going to be if we use direct labor hours? Okay, $2.50 per direct labor hour, right? We take the $250,000 of estimated overhead, divided by the 100,000 direct labor hours. If we instead divide by the 2.5 million in labor costs, what do we get? 10 cents per direct labor dollar, right? So for every dollar of direct labor, we have 10 cents of manufacturing overhead. And then we can do the same thing for machine hours. Take the overhead, divided by the machine hours. We get $20, right, Zay? Okay, $20 per machine hour. Okay. Not so bad, right? Exercise number 2. Estimated overhead has 250,000 machine hours, $750,000 in overhead costs. It takes 2 machine hours per unit. And we have direct material costs, $14 per unit. Weird, did you all see that? And it just floated by, I don't know what it was. $20 of direct labor per unit. And what is the cost of each unit produced? Okay, well, let's break it down to get our total. So we have direct materials, direct labor, and manufacturing overhead per unit. What is our direct material cost? 14. What is our direct labor cost? $20. What is our manufacturing overhead cost per unit? Well, we have to do some calculations, don't we? But first we need our rate. Take the 750,000 of overhead divided by the 250,000 machine hours. We get a rate of $3 of manufacturing overhead per what? Per machine hour. And then how do we figure out how many dollars of overhead per unit? Multiply by 2 machine hours. Right? Because it says there are 2 machine hours in each unit. So we got our overhead allocation rate of $3 per machine hour, multiplied it by the 2 machine hours per unit, and now we have our overhead rate per unit. That's something that's easy to get mixed up, right? We have to keep in our mind the activity is different from the number of units we're producing. Okay, so now we can add it all up. And I think we get $40, right, as our total. $40 per unit. Is that what everybody got? Yep, $40. Okay. Any questions? Yes, moving on to number 3 then. Company estimated 100,000 direct labor hours, 800,000 in overhead. Actual overhead is this. Direct labor hours were actually this. what is the predetermined overhead rate? And then how much was applied during the year? Okay, let's start with the rate. What do we divide by what here? Estimated, what's that? 800,000. Okay, 800,000 is the estimated overhead divided by 100,000 estimated direct labor hours, right? So our rate is $8 per direct labor hour. Then we need to know how much was applied. So what do we multiply by what? Okay, so we take that rate and we multiply it by the actual direct labor hours. We get 799,200. Okay, and we didn't need the actual overhead. They told us that number, but it wasn't something we needed to answer the questions. Oops, what did I do? So let's check, make sure those are correct. Yeah. All right, yep, 799,200 based on $8 per direct labor hour. Okay. Any questions on 3? We did 4 already. Let's go on to number 5. Okay, so here we have some cost pools. We have to think what would be appropriate drivers to measure these pools. So what activities would we use? So how could we measure activities for our setup cost pool?
How many setups?
How many machine setups? Okay. Every time we set up a machine, that's one activity. How about for assembly? This would be the assembly of parts. Use number of parts that we assembled, right? Number of parts assembled. Okay, how about if we had a supervising cost pool? That's overhead associated with our supervisor costs. What could we tie that to? Amount of employees. That would be a good way to do it. The official answer here is direct labor hours, but number of employees could work as well. Direct labor hours is a little more specific, right? Because it's not only how many employees, but then how many hours do they actually work? Because some people maybe are part-time, some people are full-time. Direct labor hours is the official answer there. And then how about for product testing?
How many products we tested?
Products tested. Let me see if it says tested or inspected. I don't remember. They have a number of tests. Okay, just number of tests. Number of tests. Okay. So let's go to number 6. Match the activity with the appropriate driver. Okay, here we've got 6 activities and only 3 drivers. Right? So some of these drivers we'll get to use more than one time. The 3 drivers are square feet, direct labor hours, machine hours. Which of those 3 drivers would you use for fringe benefits? Those are employee benefits that they get as part of their job.
Direct labor.
Okay, yeah, so that would be direct labor hours. The more direct labor hours, the more benefit costs you're probably going to have. What about electricity?
Oh,
Yeah, machine hours is the official answer. Square feet could make sense too, because the bigger the square footage of the building, the more electricity you'll use for heating and cooling. But there's, I think, a more direct correlation between how much your machines are running and how much electricity. So machine hours is the best answer there. What about building depreciation? Okay, the bigger your building, probably the more your depreciation expense is going to be. Okay, what about machine maintenance? Yeah, the more you use your machines, the more maintenance they're going to need. And then heating and air conditioning, I kind of gave that one away, but that's probably going to be tied to square feet. Yep, that's what we put. Okay. So let's move on to number 7. Are we doing, let's see. Okay, we've got 3 cost pools. We don't know what they are. They're just titled 1, 2, and 3. But we have the overhead for each cost pool, and we have the amount of activity for each cost pool. What we have to figure out is the rate. So starting with cost pool number 1, how do we figure out what our rate is?
by the estimated overhead by the amount of activity.
Okay. Estimated overhead, which is 45,900. And what is our estimated activity? Oops.
Oh, part of the one for each of both products.
Right, we have to combine both products to get our total activity.
1,500.
So it'll be 1,500. So the rate is $30.60 per activity, whatever that activity is. And how about for number 2? Go 67,300 of overhead divided by how many activities? 1,000. We get 6730 per activity. And for the last one, we take 25,200 divided by how many activities? 6,000. We get $4.20. Remember, to get your rate, it's divided by the total of that activity for all products. And then when you apply it by the activity per product, right?
So for this one, it's not really relevant. They gave us how many they manufactured.
Yeah, that's right. Yeah, they told us the number of units manufactured, but we didn't need that information. Good catch there. Okay, let's check those numbers. 30, 60, 67, 30, and 420. Oops, wrong one. Looks good. On to number 8. We're getting through these pretty quickly. I don't think we're going to finish everything though today, unfortunately. Okay, so number 8. They have 3 cost drivers: machine setups, machine hours, and inspections. We have the overhead here, which actually already is down here for us. And we have the activity. So to get the overhead rate per activity, simply divide, right? That's pretty easy. Okay, we get 38.75 on the first one. $25 per machine hour. And then inspections. $34.50. Okay, looks good. Any questions there? We did number 9 already. For 10, okay, 3 cost pools. Let's see. So we already have the cost pool, the driver, estimated activity, estimated overhead. Again, all we have to do is divide to come up with the rate. So we take the estimated overhead for each cost pool divided by the activity for that cost pool. Get 375. Machining. You get $1.95. And inspections comes out to $7.50. $375, $1.95, $7.50. Okay. Well, that was easy too. Take a look at number 11 here. Okay, we have 3 cost pools once again. The estimated overhead is already down here for us. So to get the rate, we need to divide by the activity. What is our total activity for ordering? Yes, we add together the wholesale product and the retail product to get 240,000 total activity. We divide the overhead by the activity and we get 50 cents per activity. What is our total activity for machine setups? 340,000, okay. We get 25 cents per activity. And then for the last one, we have $75,000 of overhead for inspections divided by 75,000 inspections. It comes out to $1 per inspection. 50 cents, 25 cents, and $1. Okay. Some of these are pretty easy, right? So we'll spend a little more time on the ones that are more difficult. Any question? Okay, number 12, assign each of the following expenses to either machine setup cost pool or factory cost pool. So this one actually is kind of hard. So let's just take it one at a time. Indirect materials. Factory costs? Does it relate more to your machine setups or your factory costs? I could buy either argument. What are indirect materials? It's materials that didn't go into the final product, right? They got used, but they didn't actually make it into the product for some reason. So the official answer here is machine setups. And I think the logic is every time you set up your machine, you're going to run some materials through it, but you might find that the machine needs some adjustment, and therefore the first materials didn't go through properly, and you end up with some scrap. So the more machine setups, the more scrap you're going to have, or indirect materials.
That's kind of like a hypothetical.
It's a stretch, but anyways, the right answer, according to the textbook, is machine setup. I'll just put MS for machine setup. What about insurance on the factory? Is that more related to setting up the machine or just an overall factory cost?
Factory.
Overall factory cost. So that one's straightforward. So we'll just put FC for factory cost. How about depreciation on your machines? How do we calculate depreciation? Usually over time, right? It's not per setup of the machine. So the official answer here is factory cost, although if you wanted to argue against it, go for it, but it does make sense. It would be part of your overall factory cost. Okay, the last two say machine setup, and they are machine setup. So yes, indirect labor and indirect material, which we see for a second time, related to setting up the machines would be machine setup related. So
E and A are the exact same thing. According
Well,
to the book, I mean.
You could say that A could be indirect materials for other reasons, but then why is the answer machine setup? So I don't know. It's a weird question, but I believe these are the right answers. Let's double check. Yes, the machine setup for A, D, and E. And then B and C are factory costs. We'll just go with that. And let's move on to number 13. Let's see it. We did 15 already, right? Okay. All right, so we should have time to knock out one or two more of these exercises, and then we'll have the problem set to go through on Thursday. This company makes two bicycles. They make the standard bicycle and the extreme bicycle. Total overhead is $30,000. Traditionally allocated by direct labor hours. Okay. With 150,000 direct labor hours for standard, 50,000 for extreme. So the first part of this exercise is traditional costing. So let's go ahead and figure out the overhead using the traditional method, and then we'll move on and do the second part. Okay, what's the first thing we have to do? Figure out our overhead costs using the traditional method. Start off with our formula, right? Which is okay. The estimated overhead divided by the estimated activity. Our estimated overhead is $30,000. What is our estimated activity? I mean, $300,000. What is our estimated activity?
$150,000.
Plus the 50,000 for the extreme, right? The 200,000 hours combined, right? Because we have to add both products. So we have $300,000 of estimated overhead costs divided by 200,000 direct labor hours. So we get $1.50 of overhead per labor hour, right? Okay. So then what is our overhead for the standard product? We have to take that rate. Okay, and what did you multiply it by, Zay?
The 150,000 hours for the standard.
Okay, so we took the rate that we just calculated, multiplied it by the number of labor hours for the standard product, which is 150,000, and we get $225,000 of overhead. Then we take that rate and we multiply it by the 50,000 for the extreme product. We get $75,000 of overhead for extreme. If we add those two together, does it equal our total $300,000 of estimated overhead? It does. Good. Okay. So that's a traditional method. Now we're going to read further and we will look at the ABC method. So it says there are two cost pools. Machine hours has $200,000 of overhead with 4,000 hours for the standard product, 1,000 hours for extreme. The other $100,000 of overhead is 1,000 setups for standard, 1,500 setups for extreme. Okay, so let's go ahead. Let's move this down a little bit. So we've got two cost pools, right? We've got, what was the first one? Machine hours, or is it?
Yeah.
Yeah, machine hours. Okay, so we have machine hours, 200,000 in overhead, and we have setups, 100,000 in overhead, right? And then how do we get our rate for each of those? Okay, so for machine hours, it's going to be $200,000 of overhead divided by the total machine hours, which is how many? 5,000 between the two products combined. We had 4,000 machine hours for the first product, 1,000 machine hours for the second. So that 5,000 hours comes out to $40 per machine hour. Correct? Then for setups, we have $100,000 of overhead. How many setups are we expecting? 2,500. I think that also comes out to $40 per setup. Again, just a coincidence. Doesn't always come out that way. Okay, and now we can figure out our total overhead for the standard product. Are we ready for that? So how do we do that? Okay, so we take 4,000 machine hours times the $40 rate. That's going to be $160,000 of overhead. God bless you. Then you said add that? Is that what you said, Drew? Yes. And what do we add it to? Okay, 1,000 setups for the standard product times $40 per setup, giving us a grand total of $200,000 of manufacturing overhead costs for the standard product. It's easier when it's laid out in a table. When it's all jumbled together in a paragraph, makes it a little more tricky. Okay, and now for the extreme product. We had 1,000 machine hours, right? Times $40 per machine hour. And we had 1,500 setups times $40 per setup. So that gives us a total of $100,000 of manufacturing overhead for the extreme product. And if we add those two products together, does that equal our total estimated overhead? 300,000? Yes, it does. Okay. So we could see it does make a difference with the traditional method. We had 225 and 75. With the ABC method, we had 200 and 100, right? So basically a difference of $25,000 got shifted around. And the ABC method is probably more accurate. So probably worth the time. Speaking of time, we've got enough time to do our final exercise. So any questions on this one before we move on? Okay. So we will do exercise 14. When we come back on Thursday, we have 6 problems to do. So I'm guessing it will take us no more than an hour on Thursday to get through that. Oops, did I go too far? So with the extra time, if you have anything you want to work on, questions you want to go over, I'll be here, I'll be available. But we're definitely not going to need any more than an hour on Thursday. Okay, exercise 14. So we have these per unit costs associated with production of 20,000 units. Direct materials has a per unit cost of $70. Direct labor is 110. Variable manufacturing is 45. Fixed manufacturing overhead is 800,000, but we don't need that for variable costing, so we'll come back to that. So our per unit cost with variable costing is simply the addition, right? $225 is the variable cost per unit. Now, those will be the same under absorption, same variable costs, but we have to add in the fixed overhead cost per unit. So if we're producing 20,000 units and fixed manufacturing overhead is 800,000, come out with $40 of fixed manufacturing overhead per unit. We plug that in down here, and our total cost per unit using the absorption method is $265, right? That's it, we'll just double check that. So we had 225 for variable, 265 for absorption. Okay, 225, 265. Okay. Any questions?
Go back to number 5.
Number 5, sure. Okay, let me stop recording and then I'll go back.